Good morning, everyone. Welcome to Friday's Daily Pre-Market Report. The sell-off we've been expecting, we've been speaking about, finally happened. Some extremely strange comments from Mr. Obama. Anti-capitalist at best. Whatever we think of banks, and we know their behaviour, banks are fair-weathered friends. When we've got money there, when our business is going well, they're our friends. When things are going badly and we're short of capital, they drop us like a hot coal. But we know that, and I think that we need to treat banks back the same way, continually search around for new deals, keep looking to change our banks, and certainly when we're looking for finance, don't get too pally with any certain bank. Although I understand the attraction why people sort of fall into that trap. So 11.25 we had our level of support. You can see here, check out the new device. You can see here, we've got 1, 2, 3, 4, 5, 6 days tested near enough that level, and then we knew that if we got pushed through here hard, we want to get short back down to the 50, especially with what we knew, about the repatriation of the yen to Japan, flight to safety, the Dow Jones Global Index at a big figure, and then Mr. Obama's comments. Wow. Now the last time we speaking to some older guys in hedge funds, they said in '62 Kennedy took on the steel companies and with very similar rhetoric, to which possibly less aggressive, they said, than Mr. Obama used, and the Dow Jones fell 7.2% very quickly. It was a quick spike sell-off. Are we going to get that? There is a possibility. If there is, we're ready for it, and as traders we'll be all over it and try and profit from it. But speaking back to yesterday's trade, 11.25, scroll down to a 60-minute chart. And what you want to do, you just don't want to see these long wicks. I didn't put any other indicators up there, RSI, MACD, ADX. I wasn't interested in that. All I want to see is when it hits this level, do we get these long wicks again, this support, like we have done recently, or would we cut through it? And will we cut right through it? As we cut through it, the next candle that forms, I want us to move through by 2 or 3 points. So from 11.25 to about at least a low of 11.22. We got that, 11.22.23. Then I'm looking for the next candle to sell the retrace to 11.22, 11.23, which we did. We got a high of 11.23.5. So we got short on that and just rode it down. I'm just using a 5-point stop, looking for +5 because it's a counter trend trade. +5, +10. At this point now, I've moved our stop to break even, 11.25. And I will now this morning bring our stop down to just above the 21 EMA, which is currently about 11.16. Why am I bumping a stop down so low now and not giving this trade room? Well, it's a sort of intraday trade that I'm happy to hold overnight to see if we do get a runner. But of course, I think the easy move's over, the layup's over, the move to the 50-day exponential moving average, we're done for now. I think we could get a bit of support here. Just one more thing I'd like to review now. I'm going to really go in depth on currencies, etc., gold in the members video. If you're not a member, it's not going to cost you anything. Go to the homepage, sign up for a 1-month guest membership, complimentary membership to the Genius Trader. You can review the in-depth members video. We don't take your credit cards, credit card details. We just don't believe that's really a nice way of doing business. We believe that's a bit sleazy. It's okay, we won't charge your credit card, but you have to send us an 18-page letter saying don't charge it. And if you forget one for 1 minute, you're charged. Then it'll take you 6 weeks to contact us to stop the service. I hate that. I understand why companies do it. Really don't like it. So screw them. There you go. That's my bit of arrogant. I always have to have a day where I think, I am so crazy. Who can I have a little go at today? I really must work on that and stop doing that. It's not a very attractive quality. Something I want to really make clear. We have changed our view. We have changed our bullish view on the euro. This is a euro-US dollar chart. Why have we done that? Because of Mr. Obama's comments yesterday. Do we think that the capital is going to be repatriated to Europe, or going to be invested, shall I say, in the Eurozone? No, because of their weakness. Mr. Papandreou's wonderful fiscal policies. No, we don't. We think the funds will go to the Kiwi, the CAD, the Loonie, and the Aussie. So we'll take a look at them in the members video. Unfortunate. I'm just going to take a breath because that was about 30 seconds of speed talking. We got short up here, very nice, textbook trade, 821 EMA cross, broke below the 50, sold the retracement, popped out the box. I mean, just, you know, what else do you want? Eurozone extremely weak. We broke down, we've got a really great trade. We suggested you short here. If you missed this move, which a lot of you did and took it, even if you missed that, we suggested you trade the breakthrough 142.20ish. And we expected the technical sell-off to down at this level, the 138. Now changed our view on that because of Mr. Obama's comments. I think he's possibly effectively made the US dollar uninvestable for the short term, and certainly until this power struggle's resolved between him and the banks. So for that reason, bumping our stop down, moving our stop down to just above the 8-day EMA, which is currently a small figure, 42.46. That's the reason we're doing it. I think we would have got this move, but after these comments, now we're changing our strategy. Okay, everyone, have a great weekend. I look forward to speaking with you again next week. Till then, happy trading.